Midcaps up 0.7%. Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer, is now with us on the show. Thank you, Rupen, for joining in. First, what have you made of the big sell-off that we had over the preceding few weeks and the recovery which has ensued this week and the consistent FI selling? What does it tell you about the market that we're in currently?
Yeah, hi. Good afternoon, Rima. Yes, in last 2 months or so, the Indian markets have seen bouts of volatility, and the India VIX has gone up significantly. And probably, I think all of us were expecting. So some amount of volatility was linked to the potential outcome of election results, which led to some volatility. But I would say the FPI outflow is more linked to global factors, particularly in last 2 months or so. I think the big global trade till beginning of this year was ABC, that is anything but China. And what has happened is that Chinese market probably in Jan or Feb reached that level. Probably the PE of Chinese market was lower than the price to book of Nasdaq. So a lot of other factors were there. So a lot of money tactically has moved to China, while it might not be a structural trade, but clearly there's a tactical opportunity. So a lot of FPI went there. And in India also, after the big run up in last 2 years, market required a breather. So probably we are witnessing that. But again, between now and June 4th, you will again see huge bouts of volatility, basis the noise level around elections. But that is the way, that's the nature of the market, and we have to live with that.
Hi, Rupen. Good afternoon. Good to see you in ABC, right? Earlier it was anything but China. That seems to be reversing a little bit, and maybe that's what's causing the outperformance in the Chinese market. But let's focus on the auto space. Today, one of the big gainers is Mahindra & Mahindra. We spoke to the management earlier today. They are saying that they're going to increase their market share in the SUV segment, which is already at 18%. And they're saying that dominance in the tractor segment will continue as well. You have been fairly bullish on autos, right? At current reckoning, how are you positioned and what's your preference?
Yeah, hi, afternoon, Nigel. So auto, in fact, for now, last 6 quarters, if I'm not mistaken, on a consistent basis, I have delivered very strong numbers. If you recollect, almost say 18 months or 2 years back, the narrative was chip shortage, commodity prices, high oil prices, and auto sector probably was at its multi-year low from a valuation perspective. And today, as we speak, it's a complete 180-degree change wherein, the momentum has picked up. The PVs sale in India, if I were to take for the last financial year, is at its all-time high. Two-wheeler volumes are up, but still the two-wheeler volumes are up 7 to 8% lower than its all-time high volumes of 2019. So in the current scenario, probably last 2 quarters, 3 quarters, what we have seen, the margins have gone up and also the mix has been fairly good. We are seeing higher amount of premium vehicles getting sold. So the numbers are pretty strong and stocks have done pretty well. From here on, what we have done, what we believe that some of the auto sector will take a breather for this year, that is financial year 25, and some of the tailwinds which they have will no longer be there. So in the current juncture, amongst the pecking order, we prefer two-wheelers, the PVs and the other segments. While the narrative is very strong, but we have taken some profits out there because as they say, the good news and good price is seldom there. So while the news is good, but probably now the price and valuation of some of these are at its all-time high on a valuation level. So we have taken some profits, but as a pecking order, we still prefer a two-wheeler to a PV at this time.
Okay, Rupen, hi. Great to have you on the show with us today. So, the other area of the market that has had a pretty good run at the end of the earnings season, or almost getting to the end of the earnings season, is the entire capital goods space, right? And here we've been trying to understand how market participants are viewing valuations for stocks like ABB or Siemens or some of the other large conglomerates. Because Q4 has been great, but the stocks have also rallied. Most are up 80, 90, maybe even 100%. What are your thoughts on the sector?
Yeah, hi, afternoon, Surbi. So whenever a sector comes into reckoning, with both earnings as well as a strong future earnings. We have historically seen, be it in any market or be it in any sector, the sector gets into a valuation, sometimes in a bubble valuation. And probably that is what, to some extent, we are seeing there. Having said that, no, if you see the entire, you're right, the entire capital goods pack, if you see, if I want to compare it with, say, 2003 and 2007 cycle, wherein on an average, their margins doubled, their profitability was up 3x, the stocks were up anywhere between 5x to 10x. I think something similar is happening as we speak, and wherein the numbers are pretty strong, and all of these commentary has been pretty strong. So right now, not only strong numbers, but the order book is very healthy. And assuming the current rate of execution, the growth will be pretty strong. So that's the way it is. And I would say, while valuations are definitely very high, but it will continue to remain high till such time we see some earnings which the street gets disappointed and they decide to derate the sector. But at this juncture, it's a very strong momentum. But we have to be also mindful that we can't keep on paying endlessly a very high valuation to that. So at every level, we are also taking some money off the table. But I would say we also want to be a party to this sector, because this sector, at least for next 3 to 4 quarters, will have a very strong momentum of earnings.
Okay.
Rupen, I wanted to discuss this whole aspect of the rural recovery with you, because there's been very consistent management commentary. M&M is talking about recovery in tractors. A lot of FMCG companies have seen either in this quarter itself, their rural growth has been better than urban, or they're pointing towards better recovery on the rural side. What do you make of it? I mean, are you finding this believable? Do you think rural's time has come? And if yes, then how would you play the rural recovery?
So, this rural recovery is something which, probably a lot of management were expecting to happen, beginning of the years in the run up to the election, but it has not yet played out. But clearly now we are seeing visible signs. And as you rightly pointed out, a lot of management commentaries alluding to that. And the sales numbers and volume numbers of rural of some of the companies are definitely picking up. And to some extent, they are also even better than the urban area. So what we believe post-elections, we have already seen green shoots. So we will see that picking up in the second half of this year. And to play the sector, if you see, within two-wheeler, I have said we have been constructive on the two-wheeler segment. So two-wheeler, while the volume growth has been strong, good amount of replacement demand, we are clearly seeing it. And if the rural recovery comes through, we will see that picking up significantly, leading to a better volume growth for them. So that's one way to play at it. Some of the consumer names, staple names, have already seen, some bit of uptick in their stock price basis, the commentary of the management. So that's the another way to look at it. But I would say staples would be more a defensive sector. If there is a huge amount of global uncertainty, if there is any election related uncertainty, I think staple will also act as a cushion in the portfolio. So probably these are the couple of ways in which one can play rural, and we believe probably second half should be better for rural as compared to what we have seen in last 1.5 years.
Okay, all right, Rupen, thanks a lot for joining in. Indeed, rural has made a comeback, and they made a comeback in style. So maybe the near-term things look up. Appreciate you joining in, Rupen, and filling us in with all those sector analysis that we just did. Well, the markets are seeing a follow-through.